Hey there fellow traders, welcome to today's market review for the London session on May the 17th 2023. Thanks for joining me again, and we're going to look at EURUSD to see what opportunities were offered to us within the Silver Bullet trading hours, trading hour between 3 and 4 a.m. New York time. So before we start, I'll give you a quick disclaimer just to let you know that this is obviously just for educational purposes. I am not a financial advisor, and let's jump into the charts and see what we were presented in terms of a Silver Bullet setup this morning in London. So these are the steps that I like to take before session starts. So we're going to mark out our key levels: previous days high and low, previous sessions high and low, midnight open, and the current daily range, looking for our draws on liquidity. So I've gone back in replay mode, and we are back to 245 this morning. So we can see we have previous days high up here, which is actually the weekly high now. We've got previous day's low here. Now that's just been ran this morning, so that would have been a nice trade if I was at the computer. Previous day's low has been taken. We've got lots of lovely equal highs for New York. That's a good target. So that's NY high from yesterday, Asia high, a couple of relative equal highs from Asia today, 15-minute equal highs there, and a swing high in London session as well we've put in. So that's London. So the Asia high is obviously our current day high. Got our daily low down here, and also we can see, looking back, we've got the weekly low, which is quite suspect, just below us. In the week, obviously, we can see that we are in a discount as far as the week goes, high to low, so we're in a discount zone. I mean, really, we'd be looking for longs from a weekly perspective. From a daily perspective, again, you can see we're at the low of the range in the day. So if we're going to take shorts, looking for this weekly low, which I think is a really good draw on liquidity, then we'd want to be up into the premium area for the day, which means really going and taking out London high first, then coming down for the low, at least getting us into premium for the day. Let us drop onto the 1 minute chart, see what's going to happen as we run into the session. Now I've added on my notes here additional confluences with SMT using the pound and the dollar index for confluence. This is something that I've been trying to implement into my trading. So I've got a couple of extra panes here. The first one is the pound index, pound USD, and then the bottom pane is the Dixie, so that's the US dollar index. So what I'm looking for is cracks in correlation between these to help confirm a move is in place. So for those who are not 100% sure, the pound and the euro, are directly correlated, meaning when the pound goes up, the euro should go up, and vice versa. The Dixie is inversely correlated to these two, meaning when the Dixie is going up, these two should be coming down, as you can see here. So any crack in those correlations signifies that something's going on in the market and can potentially give us a heads up that there's going to be some kind of reversal. Now, coming in here, looking at SMT, we can already see that we do have an SMT divergence between the euro, which has made a lower high here, and the pound. Sorry, the euro's made a higher low, and the pound has made a lower low. This is telling me that potentially the pound swept liquidity. The euro is stronger, so we could be making a run higher initially, so maybe get us up into this premium area before coming down. There is no SMT between euro and Dixie. Dixie's made a lower high, euro's made a higher low, so you can see these two are inversely correlated, as they should be. So let's scroll forward and see what happens. We've come down as well, something to note. Got an order block, fair value gap. We've bounced off it. A couple of minutes before the session, the Silver Bullet hour starts, we have bounced off this fair value gap order block. The dollar has done exactly the same. So we've got a fair value gap into these upward close candles here are an order block. The dollar's bounced as well. Let's see what happens. Okay, so we've got a big huge candle, displacement candle going up, displacement candle coming down on the dollar. Pound is kind of weak, it's not accelerating up. And we've left a fair value gap now, so that's displacement going up, leaving a fair value gap in between these two. So we had fair value gaps coming down, fair value gaps coming up. This, I would think, is a balanced price range between these two zones. So there to there on both sides, we've just got a massive void now of volume. And we've got the London high above us. So I would be tempted to take a long here, because that's showing me that things are going to go higher, I believe, to go into a premium. Stop loss below the low. The way I'm taking take profits on these is I'm trying to do them really quickly. So I'm doing 4.5 pips stop here is what we need to cover this low. I'm taking profit at 5.2. Now I've seen that ICT said that he would look for 10 pips for a high probability. I've been finding that grabbing 5 pips, as long as it's above a 1-to-1, has been okay. So I would be tempted. We've got equal highs here on the 1 minute as well, actually, which I've just noticed. So if we can take profit, fair value gap, equal highs, another fair value gap up there as well. Take profit in a 5.2 area, I'd be closing that out, because we may get a reversal, because I do think that the weekly low is the bigger draw on liquidity. Likewise, we have a balanced price range on the Dixie. So let's see if we can get a quick 5 pips. Not triggered yet. That's triggered us there, so we are in the trade. Rejection, which is nice. Same for Dixie. We can see pound is struggling compared to the euro. A little bit of consolidation. Perfect. That's taken it. That's hit the target in what? 1, 2, 3, 4, 5, 6, 7, 8 minutes. So another rule I have is after 10 minutes, if the trade isn't well on its way to take profit after 10 minutes, I start closing out. So that's us out of the trade. One winner. We've left the fair value gap here. Respected this fair value gap. We've filled the fair value gaps on the bearish side. The one thing that's left, look, we can see here is a volume imbalance. So I have an indicator that I'm using, which shows me fair value gaps as they develop and also highlights volume imbalances. I'm not sure if you guys will be able to see that. There's a very tiny volume imbalance which is just being filled underneath the London high. If I highlight that for you guys, this is something worth noting. This, because we've broken structure there, that would be a order block. So we could get a rejection here. Okay. We've got another volume imbalance that's just popped up. Let's move that because that's done with now. Volume imbalance and volume imbalance. It's just filled a volume imbalance. I'm not quite sure if you can see this. It's very small. Kind of got a swing low here. We've got any SMT. So what we can see from an SMT point of view now is we can see that pump there on the pound has created a higher high, taken out this liquidity. The pound ran liquidity at the bottom and has now pumped and taken out liquidity here. We are making a lower high. The euro hasn't had the strength to take out that high, leaving volume imbalances coming down. Pulled back, build a fair volume in fair build. We haven't filled that volume imbalance. Much more prominent there. So if we get back into a premium of this leg down for a short position. No, it's gone. Fair value gap here, balanced price range, so that would be an entry short to try and get into. That would be a definite for me. Try and get into a short position. If we come back into that, stop above the high, so it's less than a 5 pip stop. 5.2. No, it's just running away, look. And then the weekly's been taken. So there's no entry there. Now we've taken the weekly low. Is there anything to come back? I'm going to respect that fair value gap. So pound is breaking that low. That fair value gap. So we've got SMT here. Between these two. What time are we on? 33. Would we take a long back into this? $4.7, 5.2. There's a volume imbalance there as well between those two candles. It's in. All good. It's not taking us out. I think that has on it. It's still not taken the actual stop loss yet. How many minutes has this been? Because we'll be closing this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, I'd be closing that on that candle there. So I would have taken a loss, small loss on that. Let's see what it does. Full loss. So let's see where are we heading? Hourly chart. Liquidity there, so we've just taken that swing low there. We've got a fair value gap down here and an order block. Hourly. Also, no, we've not taken it yet. Got an hourly swing low here. We are running out of time anyway. Is that far? That's it, so we're out. So there was a trade short. Well, there wasn't a trade short. We got the trade long, which was a win. It didn't take out the London high, but it did take out these equal highs before reversing. So that would have grabbed us our 5. Well, it would grab me my 5 pips from there. This would have suckered me in as a long position. One thing that I have seen mentioned, which was a really interesting point, is that if price breaks your level, so the weekly low was my liquidity level, you shouldn't start looking for long positions back until it closes back into the range. So because we never had any candles closing back inside the weekly low, this really wouldn't have been a valid setup. So because it's not closed back inside the range, we should then do like I did, look for the next liquidity level, see if we can take this liquidity, close back inside the range, and then look for the long position. So if we integrate that, implement that rule, meaning that the price needs to sweep liquidity and then come back into the range, leaving your fair value gaps for the entry, that would be more logical. We can see, like here, I know this is only a small one, we were looking for this quick stab upwards here, but we'd taken these lows, would come into this fair value gap and immediately closed back inside. It was a winning trade. So hopefully that is useful for you guys. One winning trade, one entry that shouldn't have really been taken because we were back inside the range. We'll come back tomorrow and see what opportunities are available to us. Any feedback, please leave the comments down below, and if you're interested in seeing more of these videos, then don't forget to subscribe. Thanks very much, and I'll see you next time.